My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. I'll be with my friends, just trying to make you some money. My job is not just to entertain, but to educate and teach, put in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. New narratives. Get your new narratives here. Help yourself to some delicious new narratives. I used to hawk ice cream at the old Veterans Stadium in Philly years ago. And when I did, I always tried to come up with a little twist, make things a little bit different instead of just, hey, ice cream, vanilla, and chocolate. But I heard so many new narratives today that I have to share them because they're all kind of like cute little vignettes that can get people excited about a market that perhaps they really shouldn't be so sanguine about. The new narratives are how we ended up with the Dow gaining 431 points, S&P jumping to 2.02%, and the Nasdaq surging 2.76%. Quite a change from last week, don't you think? It all starts with the overnights, as usual. I have to hand it to the Chinese Communist Party. When they sense that there's too much bad data, they flood the system with liquidity, put out some good numbers that they gin up, and start making encouraging noises about capitalism. They also leak out that there's some shift, something going on, draconian lockdowns, maybe less draconian, where some workers will be able to get out, make something, anything, which is good because nothing else is happening. In our country, these fenced-in apartments, we would call them prisons. In China, they're sources of pent-up demand. When you get positive out of China, no matter how bogus, you get a run in many stocks that we've had way too much fear for. Tesla, Nike, Apple. Did they really deserve to rally in what could be fabricated news? You have to ask the buyers. Next, we find out that United Airlines is having a better-than-expected quarter with a large guide up. Since we debate the strength of the consumer every single day around here, there's nothing more reassuring than having a major airline tell us things are unexpectedly strong. So that's the second new narrative. Forget about the consumer being back home. She's traveling. Of course, on credit. That moves up American, Southwest, Delta. Holy cow, even Boeing went up on this one. Then there's the news out of Home Depot, where rather than trade down, consumers actually traded up. So the numbers were spectacular versus the horrendous results from Walmart. Hey, you know what? I might have a little, if you stick around, I might have a little to say about Walmart later. Home building may be cooling off, but not at Home Depot, where people appear drawn to anything that's rising in price. Every aisle seems to have something great to offer. I'll go there on Saturday, just go nuts. Maybe Chief Financial Officer Richard McPhail would like to go with me. He argued vociferously that the company has little relation to rising mortgage rates. Correlation is zero. Shocking, but hey, come on, he's got better data than we do. Away from the pathetic, deranged Walmart, okay, just pathetic, all retailers marched higher, including the ones that report tomorrow, with even the convoluted Amazon getting out of its own way for once. Can you imagine? And Amazon's return to the land of the living matters to the rest of the market, because a lot of people have pretty much given up on Amazon. Now, as we get to the end of the month, it wouldn't surprise me if some of the semiconductor companies may have to own up to how badly they're doing, because, remember, we thought that China's got 55 million people who can't upgrade. But today, one of the most beaten-up semis blossomed. AMD. And because AMD is in high-performance computing, as well as aerospace, autos, and telco, courtesy of its acquisition of Xilinx, that allowed the other semiconductor stocks, including Micron, in these spaces to take off. It was an amazing run for the group. Everybody, from Broadcom to the now lowly NVIDIA, managed to roar. Next new narrative. Sometimes, unlike the Tina Turner song, we do need another hero. And this time it was Warren Buffett riding to the rescue with a $2.9 billion investment in Citigroup. I mean, that's huge. First, it's unlikely to be his last buy. Buffett's own monumental stakes in former darlings, Goldman Sachs, Bank of America. In fact, he still got one by Bank of America. He had a gigantic slug of Wells Fargo, almost 10%. Perhaps he plans to do the same thing with Citigroup. If Berkshire Hathaway buys 10% of Citi, this would become the greatest bank stock on earth. Why not? Stock trades below its tangible book value. What they'd make if you liquidated the whole business tomorrow and returned the money to the shareholders. If Buffett keeps buying, eventually Citi will be able to catch up to its book value, making it an amazing performer. Watch out. Citi is now going to be the one that people want. Because all banks are part of ETFs, they trade together. So good news for Citi ignited a rally in the rest of the group. That makes sense, given the fact that the banks become more profitable every time the Fed tightens. But nobody had enough bravery to buy until Buffett stepped forward today. And I've noted this pattern over and over again. People say, oh, we haven't had capitulation, we haven't capitulation. You know what capitulation is? It's when Buffett comes out and starts buying things. That's what we're renaming capitulation. I don't participate in the mad dash to find out what managers might have bought. You know, we have those things that come out, the 13Fs. I don't do it because you usually get the information too late for it to make a difference. Sometimes by the time you know, they've already cut and run. But one money manager's departure seemed to be viewed as a positive. I'm talking about Dan Loeb's Third Point selling their stake in Disney. Didn't take long for that stock to rally. I have to believe that it's got more room to run, given that the stock's down a quick $50 from its January highs. I bet it could rebound just as fast. To me, this is a classic no bad news rally. It also shows that when you're up 500 Dow points at the beginning of the day, it really is all China that's calling the tune, right? At 4 a.m., it was China, not the U.S., not the Fed, not Ukraine, not Queen Elizabeth. China has a tremendous hold on our market. When they're allowed to invest in Nike, Starbucks, Apple, believe me, they do. Those are the three golden calves of China's major league lockdown situation. The big quandary today is the run in the large industrials. Quizzical. Nobody can really figure that one out, as these stocks have been pancaked by every country's tax regime, plus a lack of aerospace and defense business. But we're already hearing about a Marshall Plan to rebuild Ukraine. That would be a total home run for the defense contractors, a rare group of American companies that still actually make things. And by the way, you need a lot of cranes and stuff. If you're going to do a rebuild, you got to have cranes. Now, there were a lot of just run-of-the-mill winners, too. Like the NASDAQ names that were under so much pressure yesterday. I felt that on Friday and yesterday, nearly all of the new IPOs just got slaughtered. The close was simply horrible yesterday. I couldn't believe the amount of carnage that was visited upon any new companies, even as we haven't seen many more of them be minted because the IPO market's basically shut. Now they're bouncing. What's happening here? I think there's a bifurcation, subtle one, that's happening right now. The haves. And the haves are Airbnb, DoorDash, and Block, formerly Square. And then there's everybody else. Here's the bottom line. If we get more Chinese good news tonight, along with fine quarters from Target and Lowe's that look like nothing having to do with Walmart, we're going to have another one of these great days tomorrow. But if we don't get that good news, we're going to end up with a miserable, horrible Walmart-style view of the world. Their sporting goods aisle is awful. I'm telling you, the fishing rods are just miserable. You got to go to Cabela's, and all bets are off. Carol in Texas. Carol.
Hey, Jim. I've been wanting to tell you this for a month. When your two morning sidekicks made fun of your jacket, saying it was like something out of Guys and Dolls, don't they realize that they were comparing you to Marlon Brando, the ultimate man's man? Next time you put that jacket on, my friend, you put it on with some swagger.
I thought I was more Nathan Detroit, but I understand the Marlon Brando, and I accept that. I told them, you know what I told them off camera? I said, take back that mink. All right, go ahead.
Along with their postnasal drip, huh?
Yeah, I like that.
Hey,
gotta lose a few. What? I'm sorry.
Speaking of icons, your poster child for this environment has been Procter & Gamble, and yet when I look at Procter & Gamble since November, they're basically moving sideways. There's two things that come to mind. Number one is that that's all the best I can hope for in this market environment. But two, having heard Walmart this morning, is there something under the surface that we all need to wait with bated breath while you dig it out and reveal it to us? No,
Procter's just one of those stocks that doesn't go up on a big day. Like, you keep Procter in the Chapel Trust because when everything goes wrong, Procter still does well. I don't like to use Procter & Gamble in the same sentence at Walmart, other than the fact that I have bought things from Procter at Walmart. And I think we should leave it at that. And hopefully never the twain shall meet beyond what you and I just said. You know what? I did play. I got cut. I went out for Nathan Detroit, and I ended up playing Harry the Horse. That was Mrs. Dusenberry, and I never forgave her. Still to this day. How about Alan in North Carolina, please, Alan?
Hey, Jim. How you doing?
Having a super day. How about you?
Me too.
All right.
I need some guidance.
You came to the right place.
What?
You came to the right place.
Well, I hope you can educate me.
Okay.
I'm looking at two credit card plays, Visa and Capital One. Visa has an EPS of just over $6 a share and is still selling at a stock price of just over $200, whereas Capital One has an EPS north of $25 a share, but their stock price is only $120. I think they're both great marketing companies, but I'm trying to determine why such a big difference in price-earnings ratio.
Because in a recession, you're going to have people defaulting their credit cards, and that's going to be very bad for Capital One, whereas Visa has no credit risk, which is why it's one of the greatest companies on earth. So I still prefer Visa. Tonight, Goldman Sachs upgraded MasterCard. Mike me back, very good, too. So I say Walmart. Walmart, oh my God, stop it. I say I like Visa, I like MasterCard, and then I like Capital One. Right now, if we get more good news out of China, along with good quarters from Target and Lowe's, we're going to have another one of these great, hey, I got vignettes for you days on Mad Money Tonight. Take-Two Interactive jumped today after earnings. Time maybe to look at the thing. Like it's only 12 points. I think it's got a lot more room to run. Then I'm talking to the company CEO. Then a major chain of stores that I don't want to mention because I'm too steamed delivered a miserable first quarter, and I'm going to break down exactly what went wrong. And if you want to understand this market, then watch oil. I'm going off the charts on the hot commodity to make sense of the action. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.